March 27th, 2026. Let's go over the market and talk about what happened today. We had a continuation of what's been happening, the sell-off. Everybody knows it. Look at this sell-off right here on the daily chart for NASDAQ. It's been happening. Everybody knows it. You knew it. You had the MACD telling you ahead of time. Before the market opened today, you had the MACD telling you, expect a downward move. If you see a downward move, strike hard. You had the volume data confirming the momentum. So at the market open today, let's see if we could have capitalized on that knowledge, on that awareness. Let's move the time signature to the very beginning of the market here. Every yellow line you see is a trade that I took today. And as you can see, I took quite a bit of trades. A lot of yellow lines on that. Took quite a bit. And I actually ended the day down. I made a few mistakes today and ended the day negative down, unfortunately. And we're going to go over that as well. But right off the bat, let's just go over the strategy and talk about what's going on. So look at our higher time frames, all aligned to the downside. Let's look at the first minute of the market. Okay, let's go to the first minute. Okay, here's the first minute. 30-minute deep in the red, 2-hour deep in the red. And we just talked about how on our daily chart, we know that we're expecting a downward move. So you could literally start shorting right off the open as long as this MACD on your time frame, your execution time frame, the 1 minute in this case, and then the 2 minute when we get later into the market, because volatility changes later into the market. But you could literally just start shorting right off the bat here, and this is not financial advice. But you could just straight up start shorting right off the bat right here. Bear with me one moment. I gotta fix this here. There we go. But that's not the official strategy. We're just talking about the overall understanding of, hey, we're on a, we have heavy downward bias right now. So if the market opens with a bunch of higher time frames aligning to the downside, here's our 5-minute twins right here, then yeah, that's literally the green light. Now we didn't take a trade until it was till the proper time, which is right here. This would have been the early entry because we have a tick down. See this tick down in the momentum? Going up, 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 tick down. Now, had I entered right there, it would have been a grand win for the rest of the day. The rest of the day would have had a huge win. And my entry was the very next candle, which the same principle holds. Had my runners not gotten stopped out, this also would have continued to run for the rest of the day. It's neither here nor there. Why did I take this trade? I took this trade because all of the higher time frames are aligned to the upside. We have a volume confluence on the right side of the momentum. Enter at the close of the candle, stop loss slightly above that candle, sell the majority of the position at 0.6 R. And I allowed my runners to keep on running, and they eventually got stopped out around here. That's unfortunate. And then next trade was here for a long. Why? 5-minute twins are in the green and increasing. 15-minute has crossed over and is in the green. The 2-hour and the 30-minute are in the red still. This would have been a win, but it was a loss, I believe. Let me double check. Let me see. Yeah, that was a loss. Loss right there. And in hindsight, why not just wait for the short setups to occur? If we've got all of this downward bias on a daily chart, if the market is selling off, why not just skip these long setups and wait for a situation to the downside? You know what I mean? I took a trade right here as well. This one ended up being a win. Just barely. Let me double check that. Yep. This is on a 2-minute chart now because we're towards the middle of the market. Stop loss slightly below that candle. That target was hit. That was a win right there for a long trade. And then I took this trade right here. Why? 5 minutes are now, this one's almost in the red. This one is already in the red. We've got strong upper time frame alignment, but the 15-minute was not in the red yet. So this is a bad setup. It's a risky setup. But we did have a volume confluence, and we did have a tick down on the momentum, which is why this setup ended up being a win. So that's good. Enter at the close of the candle, stop loss slightly above. First target was hit. Perfect. Absolutely perfect. Now, I made a big mistake because I ended up shorting right here. Oh my gosh, look at this. Look at this. So I took this trade right here. Because why? I'm expecting a sell-off because this is going down. We have the higher time frame alignment. Look, we have a volume confluence on the right side of the momentum going down. And it didn't. It ended up getting wicked out like crazy, or not wicked out, but just a huge stop loss occurred. This huge green candle occurred right here. So what did I do? Because of my emotions and my immaturity, I actually took another trade I took a long trade right here. After I got stopped out, I saw this happening and unfolding, and I hopped into this one. And then what happened next? That was a loser as well. So here's a loss right here, and then here's a loss right here. So that's 2 losses back to back. Both of them were improper trades. Both of them were improper trades. On this first one that I took, this first loss, the 5-minute wasn't really expanding yet in our direction. It sort of was. It was holding. The 15-minute was not in the red yet. So this was an improper trade right here. And then I took this trade, which was super improper because I was just going with my emotions. And then I finally took this trade right here. Because again, now we're finally aligning to the downside. So this was a really good trade, okay? This was a wonderful trade, wonderful win right here. But man, I didn't need to put myself through all that pain. So that was horrible. That was a great win. Next setup right here, another great win. Perfect win. Another trade right here. Another good win. It's all the same stuff. Now, this was a good trade because the 5-minute was building and was strong. See, the 5 minutes strong and expanding in the direction of our trade. But this setup right here that I took was weak, and it was really bad because the 5-minute was not going with the trade. The other time frames were fully aligned, full power. That's probably why, and I got the win, so notice that. But either way, this was not a proper win right here because the 5-minute was weak, and it was an overextension of a previous play, essentially. And then this trade right here was a loss. Hopped in before the 5-minute touched red. 5-minute is in the green, going down, but it's in the green. That's not good. 15-minute and the 30-minute are not even going with the trade. Look at the 15-minute going up. Look at the 30-minute going up. So that was a bad trade, and I deserved to lose that one there, and I did lose. And my last trade of the day was right here. Another improper trade. Took a lot of improper trades today, a lot of discretionary trades. And this was a win. This ended up being a good win, good trade. But still, you know, I really did make a... I took a lot of trades today that were not very professional. So that's all right. It doesn't happen very often anymore. But it did happen to me today. With all that being said, I'll see you in the next one.